All right, next panel as promised. Joining the panel are three gentlemen who probably need no introduction. I'm talking about Sergey Nazarov of Chainlink, I'm talking about David Rutter from R3, and of course, Joseph Lubin of ConsenSys. In this panel, let's hear from them discuss real commercial applications of blockchain and cryptocurrency. Where is it proving its value? Where is it essentially, making waves, making changes, making progress? And most importantly, why does it matter to the future of FinTech? Joining them in this discussion is Irrera from Reuters. She's been covering FinTech and blockchain for quite a while already. So I'm actually very interested to see what kind of questions she'll be asking these three gentlemen that have been in not just the enterprise blockchain, but CBDC space as well. On top of that, by the way, after this, I'll be handing things over back to my co-host Glenn for the rest of the morning or evening, depending on where you are. And I'll be back with you again tomorrow at 9 p.m. for a fireside chat with Vitalik Buterin. With that being said, Anna, gentlemen, please take it away. Once again, my name is Gabriel. Thank you, everybody, and I'll see you guys soon.
Thank you, Gabriel. I have some great panelists here today with us to discuss a topic that many of you may have been hearing for a while now. So obviously, blockchain has been a very big topic in FinTech for a couple of years. And so I wanted to start off by asking the panelists to give us a sense of what's happened this year, where we're at with blockchain. What's been the highlights of the year? Do you want to start, Sergey?
Sure. The highlight for me has been the rise of decentralized finance. So decentralized finance is an evolution in what smart contracts are used for. Smart contracts initially were used for tokenization and generating tokens that are then moved among various private keys and basically between users. And that's what has come to define the blockchain industry so far as kind of a tokenization software product. But for me, tokenization is really kind of the email of blockchains. It's the initial and even probably unencrypted email first use case of this technology. And now with decentralized finance, based on the value that's been seeded in the ecosystem with the help of tokens and tokenization, you now have the ability to make financial products. And those financial products secure anywhere from 10 to 15 billion, depending on the day. And that's growth from 1 to 2 billion towards the start of this year. And so that growth has been rapid, and actually there's another couple of 100 billion left to go in the amount of value that could be in the DeFi format. But I would say the rise of decentralized finance during this year is probably the most notable thing that I've seen and been lucky to be part of.
Joe, I think this is a good segue for you. What was your highlight?
Sure. Absolutely. So I have to agree with Sergey, and I'll try to take a different approach to describing what I think is incredible about open decentralized finance. Just like the internet and the web technologies enabled democratization of access to information globally, the ability to create content and publish content, the ability to communicate in real time, audio, video, text, etc. E-commerce, social networking, blockchain technology, and the advent of this open decentralized finance phenomenon is bringing democratization to the world of finance. So first, what is enabling all of that is the fact that we are building a base trust layer, so decentralized protocol technology, and in particular, massively decentralized networks like Bitcoin and Ethereum enable a new approach to trust, a new foundation for trust on the planet. So they're moving our ability to imbue systems with trust from essentially subjective mechanisms to automated and objective trust mechanisms. And it's exactly that new trust architecture that enables the development of a new financial infrastructure. So DeFi protocols, which are largely being executed on Ethereum. I think 96% of DeFi transactions have been on Ethereum since the start. They involve lending, borrowing, stable coins, derivatives, synthetics, equities, bonds, full life cycle, digital asset management, insurance, prediction markets, and they are all executed by innovators. So you don't need to be a priest of a financial temple in order to build new financial protocols, and you don't need special access to link financial protocols together. They've been called financial Legos. And internet money Legos, and the fact that they're executed in software enables smart, creative people to wire them together for their own purposes, or to offer them to a wide variety of people.
David, what was your highlight
Well,
for blockchain this year?
Yeah, I'm going to take a totally different tack. This has obviously been such a horrible year for all of us. You know, it's even tough to see the silver linings, but I think that we're seeing digital transformation accelerate. And I did a little research at the beginning of the pandemic, and that's always been the case with major setbacks, and not just related to pandemics, but also to economic crises and the like. And so we're all seeing that in our real life. For us at R3, because we focus on enterprise blockchain for large corporates and central banks and the like, for us, it was about getting real this year, because some have ramped up completely. And as you know, many of the other blockchains will discover when they get into production, especially for high throughput and high value asset classes, you learn a lot about about your firm, about your software, and how to assist your customers achieve success. So, as difficult as it's been with all of us working remotely, it's been a transformational year, and we're seeing things accelerate. So I'm really excited about that.
So over the past few years, I've certainly heard of a lot of proof of concepts, tests, blockchain for this, blockchain for that. They're like, it's even hard to follow them, track them, or count them. So can you help sort of viewers understand or just get a sense of what has moved beyond the testing phase, particularly when it comes to sort of businesses using blockchain, or just concrete examples of things that are in production and achieving results?
Sure. I mean, if I can continue with that, Anna, we have a short period of time. I could jump into a lot of different examples, but for us, the one we like to point to is the Spunta project, which we did with NTT Data and the ABI in Italy, where over 90% of the nation's banks are now using Corda to reconcile daily transactions. There's been over 200 million transactions on that platform since it launched, with a 98% match rate instantly, which compares to some of these matches taking days, weeks, or years. So you're talking about billions of dollars or hundreds of billions of dollars. So that is a very real example, and you can research it. There's a lot of public material out there. Another one for us, which I've mentioned before, is the digital ventures, and I want to mention this because it's in Asia. The Siam Cement Company, working with Digital Ventures as the software provider, now has 6,400 suppliers on the Corda network on a solution called Procure to Pay. And the statistics they're reporting is that the time of settlement has been reduced by 50%, the cost by over 70%. So they're just two, real examples. And then, of course, there's, this SDX and what they're doing, NASDAQ's involvement. So we're seeing the exchanges ramp up as well. But again, I come from the enterprise blockchain space for big corporates and the like, which is a slightly different angle than the other gentleman.
Yeah, I can jump in. So ConsenSys spends maybe 65% of its attention on building infrastructure, tools, and applications for public mainnet Ethereum. And we take that technology and we have enterprise enabled it, and it's been used in the form of Quorum and other components that we've built for a wide variety of enterprise use cases. They range from commodity trade finance to commodity trade post-processing in consortium networks like Comgo and Covantis, to provenance of luxury goods and foodstuffs, to digital asset issuance, where we've taken portfolios of real estate, Mata Capital is an example in France, and tokenized real estate portfolios, issued tokens, and enabled trading. We are seeing a brand new technology that we pioneered with Ernst & Young called Baseline Protocol, which has tremendous implications for enterprise, and essentially sits significantly on public mainnet Ethereum. So Baseline Protocol enables organizations to sync up their data, to sync up agreements, to sync up business processes, by running software on their side of the firewall, accessing their own systems of record, databases, or even blockchains on their side of the firewall, and creating zero knowledge proofs that are then lodged in a smart contract on mainnet Ethereum, and they keep a number of counterparties in sync with respect to transactions, business processes, etc. This is a project that's new, but organizations like the Coca-Cola Bottlers of North America are creating transparency in their supply chain without leaking any competitive information onto mainnet.
Sergey, do you want to add something? So I guess I'll move sort of to
Sorry.
the. Oh yeah, go ahead.
Sorry, yeah, I'm seeing two kind of fascinating use cases that have emerged over the course of this past year, and I'm actually seeing them interact in meaningful ways with each other. So the first one is these decentralized financial products, which Joe rightly pointed out are basically these permissionless innovation type of environments where people can make a protocol and then they can provide it to others for consumption as a service, or they can provide that protocol to other protocols, which is very similar to the way that the web was built, right? Where you basically had libraries being generated by various different web teams, and then all those different libraries and APIs started to get composed. So I think the first thing that you see is, the 15 billion in DeFi is a huge over 10x increase over the course of this year, and very importantly, it's being built in a way that is reusable by future versions of that ecosystem and other DeFi protocols. The second category is actually decentralized insurance. So already now, with the help of smart contracts and oracles, we can make decentralized crop insurance. And decentralized crop insurance is a whole new way to use smart contracts on production, basically providing insurance to places and people that wouldn't have traditionally had it, because their local legal system wouldn't have enabled that. And it also gives the insurance companies a huge amount of opportunity because it opens up entirely new markets regardless of the local legal dynamics. And so what I'm actually seeing is I'm seeing more and more new types of smart contracts like decentralized insurance or supply chain related contracts for refactoring or any number of other contracts slowly flowing into more public systems and then being combined with the DeFi market. So the DeFi market is kind of creating a marketplace for insurance cash flows, for invoice refactoring, and then as those kind of use cases flow into the public chain environment, DeFi creates a market, and as it creates a market, it actually grows. So I think you're starting to see really the start of an internet of contracts that goes beyond tokenization, and I think that eventually, whether you're running an intranet-based system or whether you're running an internet-based system, right? Whether it's a closed system or an open system, we all converge kind of on one global global system that does all of these things in unison with various other chains and environments. And so I think right now you're really starting to see the beginning of that start to take hold in different environments, whether it's an internet-based environment or an internet-based environment. I think it's kind of fascinating that DeFi is creating a market, and then there's other types of smart contracts that are selling their cash flows or their insurance premiums or their other things into that market, which is actually driving the growth of both DeFi and creating more and more demand for decentralized insurance, blockchain gaming, all kinds of supply chain and invoice refactoring use cases. But those are really just the tip of the iceberg in terms of what's getting on production now.
So I have a follow-up on DeFi, I guess, for both Joe and Sergey. Who's using DeFi? We talk about insurance, right? Like, is it someone, normal person, insuring their phone in a way that's cheaper than if I went to AXA? Or is it, or even are some other DeFi application, or is it just, crypto traders using it? Where's use now? And like, when you hear of like volumes going up on DeFi platforms, what are we actually talking about?
Yeah, so there's go ahead.
Oh, you're Sergey.
Cool, thanks. Just to quickly clarify, I think there's two nuances. There's one nuance where if you make decentralized insurance, companies like Arbol provide that decentralized insurance to farmers that don't need to know or really interact with the crypto ecosystem. But the fact that they're providing smart contract powered insurance takes the cash flow from the existing world and it brings it in to the crypto world. And then the DeFi market as a kind of global financial system alternative creates a market for those cash flows and for decentralized insurance output in general. So you have this is really the shift from tokenization to other types of contracts. So as contracts start being used not to just generate tokens, but to generate contractual relationships, you're going to see more and more consumers relying on them. But then you'll see the output of that economic activity make its way into the DeFi markets, because the DeFi markets will be a place to monetize that activity. And the monetization of it will happen by traders and by purchasers in the DeFi landscape, which by the way, will just become more and more accessible. The DeFi landscape isn't going to become less accessible. It's going to rapidly become more and more accessible. And I think at the end of the day, various applications like Robinhood and even banks are simply going to say, look, if my users want to access DeFi markets, I'm going to give them access to those markets, just like they're already saying, if my users want cryptocurrencies like Bitcoin, I'm going to get a custody solution, give them access to Bitcoin. And so for me, it's pretty much an inevitable outcome that the DeFi protocols being made now are the DeFi protocols that will in a year be viewed like Bitcoin is viewed today by institutions as like, I want to be in a position to give my users access to cryptocurrencies. Well, in 1 year, everybody's going to want to be in a position to give their users access to DeFi protocols.
1 year is a very short time frame. Joe, do you agree on the time frame? And maybe can you give us an example of who's using the?
Yeah, there are legacy economy or traditional economy insurance companies, whether they're bigger insurance companies or smaller, more agile ones that are making use of smart contracts to offer insurance on bicycle rentals or phones, parameterized insurance for different situations like flight cancellation. A good amount of the excitement around insurance protocols is indeed squarely in DeFi, where certain smart contracts, certain financial protocols are being covered by protocols like Nexus Mutual. So these are situations where people are wiring up some different DeFi internet money Legos into systems that produce yield, but it's still early days, and these systems are rough around the edges, and people have been cut, and so there is significant interest in protecting oneself if one is entering into a trade or staking some money in a DeFi protocol. You can potentially cover any potential loss or partial loss. And these protocols essentially enable capital formation from the crowd, and then the crowd is able to collect premium. And in some cases, it's less of a strict insurance contract and more of a mutual protection. And in those kinds of situations, you have people assessing claims of loss, and so far we've seen very reasonable voting on payouts for the situations that warranted.
Hey, Anna, can I ask a question?
Yeah, of course.
So I've 30 plus years in the financial markets. I've owned broker dealers and the like. These are highly regulated markets, and every time I dial into one of these things and hear about all of the forward leading statements on all the things that are going on on Ethereum, I learn a lot. The question is kind of what is live and what's the impact. And even if these smart contracts are being used in DeFi and I'm not aware of it, that wouldn't surprise me. But the regulators in the insurance market and in the finance market is going to have something to say about this. So are we talking about something that's 5 years out, 7 years out, 10 years out? Where's the regulatory framework for all of this? Are we talking about stuff now, or are we talking about things 5, 7, or 10 years out from now? Because then, I would examine things a little bit differently.
Sure. So I was careful to point out that some of these systems are not strictly insurance. So generally, smart teams are working with law firms to define structures that are acceptable in the jurisdictions that they operate. So for certain kinds of approaches, the time is now. For other kinds of approaches, if you're already a regulated insurance company, it may not take very long to get your regulator comfortable with the software that facilitates your systems running on a blockchain rather than a centralized server.
Okay, sorry, go ahead, Anne. Thank you very much for that. I'm keen to know what kind of transaction level and volume we're seeing and how this smart contracts and law works, but that's for another day. Thank you.
So I guess this is for everyone. I remember when I started focusing more on when I covered blockchain, on sort of blockchain and finance, which I guess is more the domain that David's in, but also Joe to an extent. And I remember at the beginning, I heard that blockchain was going to get rid of custodians, all sorts of intermediaries that are there for a reason. But at the very beginning, even, analysts at market structure firms were saying that this was going to happen. And as of now, it's not really happened yet. So will it actually disintermediate someone, or in the end, once it gets implemented, you realize that you do need people in the middle? I'm not talking banks necessarily. I'm just talking steps. And if so, is it 5 years, 10 years, 20 years? How long? And how do you keep people and sort of engaged that long that they don't get, they stop believing that anything is going to happen? The wrong question.
Well, there are wallets in our ecosystem that enable people to self-custody their own assets. The Gnosis Safe wallet system holds billions of dollars worth of assets. And there are software developers that built that, but it's out on the blockchain, and anybody can use it. Anybody can create their own instance. I think there are 150,000 instances. Our own wallet, MetaMask, we have somewhere around 1.5 million users. And it is also a non-custodial wallet. We don't control the assets in the wallet. The user is in full control of those assets, and the user, whether it's the Gnosis Safe wallet or the MetaMask wallet, can choose to participate in decentralized finance activities, earn some yield, lend money, borrow money, and many other kinds of activities. And what they're interacting with, the intermediary, for the most part, is a protocol. It's software that they're sending their assets to. The assets are resident in that protocol and custodied by that protocol according to well security audited, in most cases, hopefully, and well understood rules and procedures. And so, yeah, there are new kinds of intermediaries and new kinds of custodians, but for the most part, it is significantly under the control of the user. There are some situations where the law requires a custodian for certain kinds of interactions. And so we've actually had to build an explicit custodian node, even though it wasn't really strictly necessary for the application, just to conform to a law.
David, do you want to add anything or have an answer?
And I've been, if I think back 5 years ago, was, to your point, custodians will be gone. Everybody's going to be buying stuff at Bitcoin. And I'm just a realist. We're delivering solutions that save, millions and tens of millions of dollars to our customers now. And after that, it was the custodians were going to be gone, and now, DeFi, which I think is very interesting. And like I said, I think these thought experiments are interesting. At R3, we're taking a very, very different approach to this market, and we're focusing on delivering solutions now that leverage off of some of these technologies. But I do feel that as a blockchain community, we're always talking about the next great thing. We talk about billions and billions of assets. Well, there are billions and billions of dollars of cryptocurrencies and the like that don't easily translate into the real economy. So, we are seeing some progress on the edges, and there's a very significant correlation to the value between the value of the cryptocurrencies and the interest in some of these products and the like. But it just sometimes comes across to me as just a little bit dreamy, and it's always the next thing. And we're trying to stay laser focused on enterprise blockchain.
Well, Dave, you and I were both around when the internet didn't exist, and it has developed rapidly and transformed everything. We're seeing the same kind of innovation going on in the decentralized protocol space.
So a question, I guess maybe Sergey, you can start off since you haven't spoken in a bit, but just for everyone, when is it actually, when are the benefits of blockchain going to impact the man on the streets? And it can be across anything. I don't know if we mentioned it on this panel or another, but I remember maybe a couple of years ago, even a big supermarket chain said that you could use blockchain to track products. I haven't seen anyone, a supermarket or my friends or my family, no one knows that you can do that or has done that. So has it trickled down to normal people? And I'm not talking about crypto traders, like the granny on the street. Is she seeing any benefits of blockchain? And if not, when? And do you believe that it will happen?
Yeah, sure. So to answer partly the previous question and kind of this one maybe at the same time, I think the way that this happens is that you always need a system in place to facilitate certain types of interactions between people on a contractual basis. And that's all the examples we talked about. They're just contractual interactions. And if you look at how the world has developed, maybe before you would have gone, to a store to buy soap or to buy books, right? But then Amazon came and you were able to order that soap or that book from Amazon. But then the next evolution of that is actually that there are other sellers on Amazon. So Amazon created a marketplace where people could go. I was in a Uber ride before the pandemic happened, and I just was talking to the Uber driver because he seemed like a nice, interesting person. And so he drives an Uber and he sells home goods on Amazon as an Amazon seller, right? And I think it was probably pretty tough to imagine. And before this, he was a teacher or something. He had some other profession, and it's hard to imagine, however many years ago, that some guy is going to be ride sharing his car and that he's going to be selling, home goods like soap over the Amazon marketplace and being able to do that efficiently. And that's gonna be the soap that I buy, or that's gonna be the ride that I take to the airport in Denver or wherever. And that's hard to imagine, but that's where we are, right? And so I mean, it's hard to imagine back then. Now it's obvious to imagine. Obviously, you would use an Uber. Obviously, you would have a marketplace where people competitively compete to provide the highest quality goods at the lowest price with the fastest shipping speed. I mean, that's just obvious at this point, right? And I think it's going to be the exact same thing. To answer the second question that you posed just now, how fast it'll happen at different speeds in different industries depending on need. So there are certain vertical use cases, such as books. Books are a good vertical use case, turns out, for e-commerce. They don't have a shelf life. A lot of people want to buy books, apparently. Those people, are early internet adopters. And so that's a good initial use case. Of the initial use cases that I see, a lot of them are in the financial world. And that's proven by the fact that PayPal lets people buy cryptocurrency. I think, PayPal doesn't just give up that real estate in their really, really limited mobile application just because they feel like it. I think they spend a lot of time researching that. And I think if I had to guess, what their research shows is that inflation is coming and everybody is going to realize that the assets and the wealth that they have is not as safe as they thought it was. And their alternative to that is going to be crypto assets, Bitcoin, and DeFi products that give them access to that. So I think it's going to be vertically focused specific use cases where people start to see the benefits of this. I think one of those is already a hedge against inflation. I think others are insurance for farmers that might not even know they're having blockchain-based insurance, but they are. And I don't think it's just going to be one massive overnight thing. I think it's going to be in a few vertically focused cases where it's particularly relevant, and then it's going to grow from there.
Yeah, I was just thinking of PayPal. I wonder if it's just them trying to monetize Venmo, given that there's money in crypto trading. And I don't know if it's perhaps confusing for viewers to look at crypto and then together blockchain, or maybe the two should be looked together and they're separated too often. But unfortunately, we could speak about this for hours, but I'm being told by the chat nearby that we're done. We don't have any more time. So I want to thank you all for your time. I hope to chat to you soon.
Thanks, everyone.
Thank you. Great chatting with you. Have a good one, guys. Thank you.
Welcome back to the Global Common Channel. I hope our brief detour into the Blockshow segment was able to give you some great insight there. We do want to apologize for those technical difficulties that we had with our visual in that panel discussion talking about the real commercial applications of blockchain and crypto. This brief detour, as I mentioned, hopefully provided you a fresh take on the fast-moving blockchain tech industry. We all know it is moving very fast.